Hey everyone, welcome to another episode of Crypto Tips. My name is Toby and I want to quell some fears about what is happening in the market right now. Okay, so if you don't know, this is kind of being spurred by this thing called, or this giant developer, Chinese developer called Evergrande. And they're an over-leveraged Chinese developer that is going under right now. They have over $300 billion of liabilities. So yeah, they're kind of screwed. And a lot of people that are, real estate in that area is really screwed as well. For reference, Lehman Brothers was about $30 billion, okay? So this is $300 billion. Keep in mind that, those are big numbers, but the amount of currency that is being printed now is exponentially more than both of those combined, all right? Back when Lehman Brothers collapsed, $30 billion was a lot of money out there, a lot of currency out there being floated around. $300 billion is not that much in the grand scheme of things. But yes, it could have ripple effects around the world, which it is guaranteed to probably have. But let me go over some things that make me not worry about this at all, and probably some stuff you might not actually know. All right, so who are some of the largest holders of Evergrande debt? Well, number one on the list, it's BlackRock. You've heard of that. Okay, HSBC, UBS, Goldman Sachs, and the list goes on. So I just named a bunch of the big boys that are invested in this. If you think for 1 second that these giant investment firms, like I just read off, are going to lose, you're wrong. They're not. They never lose, all right? So what do I mean by that? Well, governments have a tendency of bailing out their friends, right? And the people that own the governments as well. These guys own governments, essentially. So yes, they're going to get crazy amounts of bailouts. That means that the debt is going to increase with a lot of countries, all right? And also, it's not just the companies that are going to get bailed out. It's also going to be the stock markets. The stock markets are 100% rigged. There's zero bearing on reality in the stock markets. If you want to look at the health of the economy, don't look at their stock market. Their stock market is completely fraudulent, all right? You may think, well, that's a big claim or whatever. Keep in mind, the Federal Reserve and all central banks have their own trading desk. If you don't believe me, go ahead and research it yourself. They have their own trading desks, all right? And that means they're used, those trading desks, why do you think the US Federal Reserve would have a trading desk? It's to prop up the stock market. You've probably heard of the plunge protection team. I think under Reagan that was put in place. Well, it's out in the open for everybody to know. So that's why I am super bullish on this dip. We have something called the CT Club, and we've been giving our trade alerts, pretty much a lot of trading alerts. It must be annoying for everybody just because I'm like, I just bought another this, I bought another that. I'm dollar cost averaging on the way down, and that is the way to do this. This is what we've been doing. This is our third bull run. Like, we understand how to make the most out of dips, and we've been doing it for a long time now. So what did we do? We had actually taken a bit of profit literally 2 days before this happened, or a day and a half before this actually happened. And we let all of our CT Club members know, hey, we're taking some profit because I think we're gonna have a dip. And what happened like a day after that? We had this dip. And so, taking profits on the way up as your coins rise is a really good thing. You know, you dollar cost average out and you dollar cost average in. You dollar cost average out when things are rising, you dollar cost average in when things are going down. We've also been buying Bitcoin regardless of what the price was. We have a dollar cost average system that we've been doing every week for the past 8 years pretty much, and it's served us really well. And so, okay, let's get back to this. I wouldn't worry one bit about this. I think that, you know, there's going to be temporary hurt. Yes, we could go down to the 30s. Who cares? Who cares? Wouldn't you be like happy to get into the 30s and then, you know, eventually this is going to pass, which they all do, and then it's going to go to all-time highs. Keep in mind the last bull run we had, 2017, 2018, had like 40% drops. And each and every time people are like, oh my gosh, this is the end. We're finished, you know, this is the bear run. So they sold everything and then they ended up buying back higher. And this is what happens every single time. So we will let you know what our strategies are. Follow this channel, like it, subscribe, and keep in mind that just relax. Don't listen to the masses of people trying to sell, people saying this is the end of the bull run. I don't think this is the end of the bull run. I think we have a little bit more to go. Or actually, I think we have a lot more to go. Anyways, I'll talk to you soon. Bye-bye.